Alright, so I can see you there. This entire video recording is gonna get messed up. It really is. And I can't do anything about it. Whatever. Anyway, so we did the flag breakout with the pennant over here, and so if you took something like this on this sort of a flag over here, now it should be fine there now on Ticker. Check it, it should be uploading there soon. I had to go into their system really quick on the side and delete the couple videos that I uploaded by mistake when we were testing. So it should be streaming there now again on Ticker. Yep. Okay. So if you're playing this flag over here on say on this breakout here on VRX, your stops is obviously at the bottom of the lowest point over here. And thanks, Ryan. And so your entry area over here was right as soon as it break out, and your stops was at the obvious area. I wouldn't never put a stop down at the 50 EMA here, even though that's obviously your main support. Because if it came down to this 50 EMA, then your flag pattern over here is broken, and so you don't want to get into a situation where you're taking a trade and you're entering into a broken situation. Then it makes no sense that you even played the flag. You should have just waited for it to come down here. But if it did break, you get stopped out there, and if the price came back into the 50 EMA eventually, then you could have taken it there again for another long shot. But basically this bottom here, which would have served as a double bottom basically, so it would give you the and then it obviously triple bottomed, so it would give you the strength to take the trade there with risk to underneath it. And obviously it worked out to be fantastic for the people that did go long. But inside of there are always like what I notice, and I know that this is a miniature head and shoulder here, this is a miniature head and shoulder here. So inside of trades there are always trades inside of trades basically. So it's like you see a double top, sure. You see the bigger picture with this, which is a huge bull flag. You see a little pennant over here. You see a double bottom over here. So inside of trades, there are so many different little patterns that you can find inside of a bigger trade to really try to get you into a good position on a trade. And I just want to make sure that you guys can start seeing these formations. I know there's a lot of people that we trade with daily, and that have been using a lot of the patterns. I know for sure a lot of people are just messaging me where, hey, I used the flag pattern and it worked, and I used the head and shoulders and it totally worked. And so I'm really happy that you guys are spotting the patterns quicker, because it's just obviously it's a visual thing, but you have to be able to see them. Because if you're just trading this, traded it without any kind of idea of what a pattern looks like or anything like that, or how it's supposed to flow, I'm not sure if where you would really buy into. I guess if you played volume alone, you could probably have caught some of this move over here. But when the top happened and the bottom and back out, you would have to come into this candle over here on this volume bar over here if you just played volume or something. But if you played patterns, you were sitting in the trade over here already, just waiting for the breakout, and then you have your stops already set. Okay, I wanted to do, there was win that I took today. So I'm gonna go over the win trade that I took today. Eventually, when it stops lagging on your end, and you'll get to see the win chart, and I'll show you why I took the win trade short. It was pretty simple. There was a top here, and I just nailed a double top over here on win. So when I got in at $91.50, it obviously went up a little bit past on me. But the reason why I got $91.50 as my starter on this was because it wasn't really a starter. It was more like half size because I kind of was dependent on this double top over here to work. So when I got in on it over here, I didn't have a stop. I was gonna add into it and then just really kind of play it out because there was a bunch of other areas that I could have added into this area here if it went up that high. So it would if that area had this lagging is really gonna piss me off. If this area had broken and it went into this area over here, I would have definitely added more into the short position because I definitely wanted to short this. Now, um, the reason why I had this on my chart since last night is because not because of anything to do with the intraday trade or anything. The fact that I had it on my chart last night was because of the chart was under its 13 EMA on the daily chart, and so it's under the 13 EMA. So more likely, if you're gonna get a nice short on a position, it's gonna come back and retest the underside of that 13 EMA. And as you can see, it clearly came back and just pinned that 13 EMA there to the underside, and then the move really came into formation. Um, I think I can't remember exactly where I covered this thing, but I did get a monster move out of it. I got from 91.50, and I took some coming into it. I took a point right into the first pull here, and so when it came under the 50 here, I add into the position. I don't have to like put my my ads. Sometimes they're so quick when I'm in the trade, and obviously you see these are big bars. The move kind of did happen a lot faster. So I did add under the 50, and then the chart just kind of totally washed out here. I really cannot remember exactly where I covered the damn thing. Oh. No, it was before this big pop, I remember, because I watched it later and I said, oh man, it came back lower. It was before this big pop I did cover. So I think I ended up getting about 4 points or so on the downside trade. And the entry was perfect, the ad was perfect under the 50, and then the exit was perfect. And the reason why I was looking for that exit down there, honestly, I have no technical reason for looking at the exit down there. I did not have a technical reason for looking at it down there. I was just really happy with the trade. And then when I saw it popped, I said, "Oh well, just thank God I took it off." I mean, obviously, if it popped and I would have had a stop somewhere over the 13 or something, for, just saying, I would have ended up making more on it. But at this point, when it was coming down here, I was just totally, literally, just happy with the whole trade, and I covered up for that amount, and I really did not care where it was going after that. And I think I looked at it once after I did the whole trade. So that was my win trade today. Oh, and this SHPG. Okay, this was a perfect top in area over here. Provided a nice double top area, even though it pushed over just a tad, like 20 cents or something that it pushed over. This was a perfect double top opportunity. Now when we start going into, because I'm gonna do a whole series, I did a candlesticks. Yeah, I did a candlesticks video, and it's on YouTube. But I feel like there's more I can go into with exactly like what percentage of the candle previous do I try to get into, and there's little tricks that I could not put on that video, and I think that if we do a couple of sessions maybe with just individual candles and we go over them a little bit more in details, that we can just get a better idea on it. So eventually we're gonna go into that. But what I was looking at on SHPG, obviously I was in this trade a little bit before I should have been, and I was playing into these candles here and this double top area here. And then the chart kept ripping on me, and then so I decided to just let it do what it wants to do, and when I see a top in, I'm gonna get in. And the funny thing is, where I was adding in, the people in the room, they were starting their short in position there, and they actually made more money in this entire trade than I did. Even though it came all the way down here, I didn't even wait for that. When I came back to my average, I just got out of the trade flat. I think I lost commissions on it, so that was pretty much all I lost on it. But as far as this trade goes, there's top in over here, and say you played this here on a double top formation, because as you can see, it's a pretty defined double top formation. You have a dark cloud cover over here, couple hammers, big candle, quick rejection on a shooting star over here. So you would definitely take this on a short side. And that was definitely something that I was looking into. Like, that's a pretty good setup there for a short. Now, I was already in. Why wasn't my stop at high of day? Because I wanted this. And I kept saying it in the room. I said, this is something I want to short. And it was just because the chart was extended, and I wanted a big. This is what I really wanted, tracker. I had conviction that the chart was gonna come down, like 10, 15 points. I mean, it came down from 190 to 180, and so that's a big move. And so I was expecting a big move to the downside. I just wasn't expecting myself to get into having to hold it longer than I wanted to. And yeah, I should have. I mean, I'm teaching you guys where to put stops and everything. I should have had a stop there, and I should have gotten stopped out when it broke. But I was kind of, I was really determined, which sometimes works out great, sometimes it doesn't. But I was determined on shorting this thing, and so I really had conviction that it was coming back down, and I just wanted to. When it went over this way, I just let it do what it needed to do, and then I added at the top. I think I added into this candle over here, and I had a decent average. My average was actually right here, so I could have actually made a lot of money on it, and I just came back into it, and then I took that off because I literally wasn't fighting for the money there. Um, did I cover at the 50 EMA? No, I literally KMX. This is for you on Ticker TV. I literally covered when I got back into my entry area, because I was happy for the day. This wasn't like a trade that how could I put it? I didn't feel like I needed to make any more. Look, I did that win short. I got like 4 points on it, and then I made 32 points on my DWTI short. Okay, I short at 197 short, held it overnight, and I covered at like 165 today. So it wasn't really something that I was worried about so much. I made 32 points on DWTI. So my trade in today, yeah, DWTI, I had money overnight. I had money that I woke up to, and then numbers were out this morning, and then it just kept coming down, and there was no reason to cover the thing. I actually covered at the 165 because I was totally just happy. I was just happy with the trade. I could keep this going. Obviously, it's at 157 now. Um, but it was just something that just, I didn't even care that I could have held this, that none of my moving averages was telling me to get out of the trade. I couldn't care less what it did, honestly. I was just so happy that the trade worked out this well. And I played it off the rejection of the on the daily chart, and you guys knew this, that I was playing this off this rejection on the 50 EMA here. And I mean, that's a perfect perfect setup for, I mean, this was more of a overnight, but it's same thing like if you're doing an intraday, a perfect setup of a rejection of a strong moving average, which for me it's the 50 EMA. It was also a bearish Harami right here under the 50 EMA. It was just all signals for me to short. And so when I nailed that 197, it was because I wanted it to push up to the 50 EMA. That was my whole goal, was to get that entry right as soon as it nails the 50 EMA. And you know how I trade, how I have my chart set up, where there's a big chart here, and on the side here there's a daily chart of the same big chart, so that I can see the relationship intraday versus where it's doing on the daily chart as I trade. So it's really something that maybe you guys can consider. Maybe you guys can consider using it, like having a side chart on the side with the same chart over here. Just link them together and have like a daily chart on it, because sometimes there are incredible trades that happens intraday, or insane breakouts that happen intraday, and you don't understand why it happened, and then later on during the night you just click over to the daily chart or something and you're like, oh, that's why that thing went crazy, or oh, that's why that thing, broke out to the downside, because it broke like a trend, or it broke lows, or whatever the case is. So it's really nice to have a little chart on the side with the daily. So when you're setting it up, you can set it up like that. I actually have a 5-minute that I trade on, and I have a 15-minute, and I have the daily off the same chart. So that's the three that I have on my main chart, plus obviously my L2. So that's how my main chart is set up, so that way I can get a visual of like kind of a bigger scope on my smaller screen of what's going on the big trade. Back to the win. As far as why didn't I cover any when it hit the 50 EMA on this first pull? Oh, this first pull just came right back in. I was 191.50, and what's up, Wall Street? And I covered half at 90.50. It was before the 50 EMA that I covered. I did anticipate that the 50 was underneath me and that it could possibly bounce. So when I covered 1 point, and sometimes on a trade like this, it's not even so much for me as where the moving average is. It's sometimes for me, it's saying to myself, hey, 1 point is 1 point. I'm going to take 1 point, right? What I did was I got the short. I took 1 point off for half, and I put stops on my entry. That's how I played it. And then once it came under the 50, that was pretty much all she wrote there, and that's when I added into the trade, and that's when it just pulled. I actually did not even get full size position into it. Not sure why not, but at the time the trade happened, it was kind of fast. I was also on the side chart watching my DWTI, and so I guess sometimes your mind doesn't focus as much. Like, say I was just staring at this wind chart alone for the morning, maybe it would have played out differently. But I was looking into other stuff too and playing this one. Maybe I thought I had some more time to mess with it. I didn't expect it to yank like that. Did I think I was gonna get 4 points out of it? No, I thought I was really gonna, honestly I thought I was only gonna get like a couple points out of it. I was expecting this entire chart to come back down here into this area here and just kind of either flatten out or hit a bottom and bounce. So when I took the trade, my anticipated area for exit was kind of around here. But once I took it there, I took my 1 point, put that in my pocket, and I put my stops at entry. It basically was a trade. I just call it a safe trade afterwards, because it's basically just a chart you can just leave and just come back whenever, because it's something that's safe. So once I took it, I literally just grabbed this thing, threw it to my side monitor, and just left it there. And then I concentrated on watching like DWTI and stuff, because I had a lot riding on that one. And then obviously with the oil numbers and stuff, it could have just like jumped on me just unexpectedly. So I was kind of keeping a close eye on that one. But the win trade was took the 1 point, stops at entry, added under the 50, had it wash, and then I was just happy with the trade. So I really didn't care where it went. I was just happy with the points that I got on it. As far as the formations go on this one, there isn't really much to follow. If you really look at it, there It really isn't much. I mean, you can say that this is an inverted head and shoulder here, which worked out pretty well for a nice little bounce there. And even here, you could say that that's a regular head and shoulder here, with that's the shoulder, and that's the head, and then it came back into the chart. You can look at it as a rejection of the 13 EMA or the 8 EMA, and then you flush it under that with target to low of day as your area, holding some for the what if. So you could have played this a bunch of different ways, even if you got into the trade at this point. And when I'm trading in the mornings, I'm on 5 minute. I barely ever switch over to the 1 minute anymore. So this is how I saw the trade happening with these candles and everything. But I did have it lined out, so that obviously made a big difference for me. And obviously my lines were on the daily chart. I had the 13 EMA tagged out, and then when you bring it back to your 5 minute chart, the 13 EMA turns out to be exactly right where it hit. So that's the way. That lagging thing is just insane. I'm so sorry, but it's just nothing I can do about that. So I don't even know if I'm gonna really post this up on YouTube. I'm embarrassed of this lagging thing. Maybe, I don't know. Maybe I'll go through the recorder and see if it's recording as good as the if it records as good as the Ticker TV one is streaming, then maybe I'll just post that up, but not sure, because there's a bunch of it. It should be fine, I know, because the one that's coming through on Ticker TV, I don't know. We'll see. We'll see. Ticker TV one is working fine, I know. This one on Omnovia is not. It's lagging, which is weird. Omnovia is a paid service and Ticker TV is free, and it works amazing. As far as double tops and double bottoms, I just want to run through a couple of them. Obviously, on Win, this was a pure double top play right here, from this top to that top. It was a pure double top play, pure under the 13 retest play. There was quite a few reasons why I picked that one. SHPG intraday, that was a beautiful double topping situation over here. This was also a double topping situation that failed, obviously, and as Don stated, I should have been stopped out of the trade, but I think I had that feeling that it would move like this. And sometimes it's a bad thing to estimate things like that, Don, and I totally understand if you're like, but what the hell, you didn't respect your stops. But sometimes, look, there are things that you would do that you would break your own rules for, because you gosh, it's like an intuition thing. There are some trades that I'll let move on me if I'm in it, even if I'm short or long or whatever, depends on. But there are certain trades that I'll let move on me, depends on the kind of trade that is, or it depends on what I feel like it would do. And I just felt like once this chart was gapping up and it pushed right at open, the candle opened here and it just pushed right at open, just started to move up. I felt like I was already in a situation where, if you watch the gap up videos, it's like, you know, if the runner runs over here and then right at the gate he keeps sprinting, I felt like he would eventually get so exhausted where it would fail, and the more it kept going up, the more I felt like I was just really gonna nail a 6 short on this. And so I just had like conviction that I would keep it, and that's why I kept with the trade. And at this point here, I should have technically gotten stopped out, because obviously it broke the flag and pushed up to the upside. But I played it. Bending the rules a little bit, understanding my risk, and it worked out in my favor. Obviously, if I had kept it, it would have worked out well in my favor. But I don't know. You know, in the trade-in day while it's going on, I mean, you guys can all attest to this, that, you know, it'll just things would be different for you. You would play things differently, you would see things differently, you would assess them differently, intraday live trading with your money on the line. Watching charts right now and going over them, is, it's all hindsight stuff, right? Like, hey, didn't you see that? Hey, couldn't you see that? But it's all hindsight stuff. If we were having this conversation intraday, and this broke out here, and you're saying, hey, why did you keep it? And I'm telling you that I just have a good feeling that we're gonna get a nice wash out of this. And most people obviously would have gotten stopped out there, and that would be technically sound. If you get stopped out even high of day, that'd be technically sound, and obviously you'd lose money into the trade. And I came back and actually, broke even, and it was only because I wasn't fighting for the extra money here at the time that I just kind of killed it right there. I could have held it for more, and obviously it pulled straight down here under the 50. It was still a nice wash here from a 185. I think it was 185.88 average or something. I mean, it pulled all the way down to 180. That's 5-6 points down here. But I wasn't hungry enough to fight the trade anymore. And I guess, on days when you're comfortable with your goal that you've hit, it puts you in a whole different mindset. Like today, I was just so calm, and just trading, just really really calm. Even when I was talking to you guys and we were going through stuff, it was just really calm after a while because I've hit my goal, and I wasn't trading heavy on anything because I didn't need to. Go over my UVXY trade from Monday. Huh. Okay. From Monday. Alright, let's go back a couple days. So that's today. What's today? Wednesday, Tuesday, Monday. UVXY long. Obviously, I would hope it was a long. When I took it here, I should have my notes from Monday. So I write everything down. But where did I take that? $18.20 long. Okay. I write everything down. Even though I have them obviously logged on my computer, I write every single thing down. I write my entry. I take a quick note of why I took it. So I have a notebook here. So by 3 days back, I have 3 pages back. Um, every day is a new page. I don't just jot down stuff in any order or anything. It's like literally every single day is a different page, and every 7 days you'll see my weekly trade ideas on the page, and then the next day starts the week. So 3 days back, 3 pages back, and UVXY entry was $18.20 long right here. And then we got this move out of it, SHA, and it was over the 50. It was a trend break. It was every reason to get into the trade. Trend break over the 50 EMA, finding a bottom over here. Target was over here, and obviously it pushed through that, and that's where I had my stops on the pullback. Came back right here. It held. So it was a nice technically sound trade with the breakout over here. And obviously, if you wanna really understand or get into how I trade, or if this is something that you really really want to learn the way that I do it, not saying that it's the best way, for sure it's not the best way. um if you want to do it, just kind of set it up the way that I have it, so that way you can see what I see basically, or feel out what I feel out. Because if you're here every week and you're seeing these things every week, your eyes are kind of accustomed to seeing it now, and you're kind of seeing what I see through my moving averages. You can put them in. You could use them. You could use your own ones, but if the bottom line is that you want to set up your platform where something's consistent. Something's got to stay consistent. Don't change your moving averages every day. Don't change your time frames every day. Don't be doing different things. You gotta have some sort of consistency. And for me, 5 minutes, 8, 13, 50, that's it. Those things remain constant. So the variables are less and less wobbly on me, and that I can say, okay, well, from in the if you ask me, hey, what's that green line? It's the 50. What's that red line? It's the 13. Like, I know these things because it's the same. It's always the same in all my charts, in all my time frames, in everything. It's the same. So have consistency in your charts. If you like a certain time frame, use that time frame. I only have 3 monitors. If you like a certain time frame, use that time frame. If you like a certain moving average, use that moving average. But master it. Understand how they work. Understand how strong they are. Understand how weak they are. If they're, I mean, you gotta really just set up your platform something that you're comfortable with. If you like smaller time frames, if you're a scalper guy, and you just want to use 1 minute time frames and you want to just scalp stuff over or under the 50 EMA, you can do that. But you will get stopped out a lot because the 1 minute is just it's just a little smaller. If you It's good if you're a scalper. It's good if you're saying, hey, this 813 crossed over right there, and I'm gonna go long, and I'm gonna scalp it right there, right here. I'm gonna scalp UVXY at $19.50. Sure, it pops up to $19.70 or so, and you're out of your position, and you're done. You're a scalper. I'm not a scalper, and so. I can't teach you something that I'm not. See, because I'm a setup trade person, and so I'm looking for a formation or for something to get you into a trade that'll take you into a bigger play, something that'll keep you into the trade for the entire day or for the for a bigger duration of the move. A lot of people would take a lot of people would scalp here, and possible off a double bottom or something, or even a 813 crossover. They would scalp it here and get here. Meanwhile, if I went short on the break over here, I'm keeping the entire move because my 50 didn't even get breached there. There's no candles that closed over it. So I'm still short, and I continue to be short, but I took it from up here, so I don't have to worry about a little bump over here because that's not stopping me out from up here. So I'm more of a trader where I look for a duration trade, a longer trade, something that gets me the bulk of the money, rather than just that 10-15 cent move. They're all EMAs. Everything I use is EMAs. So it's the 813 and 50. I have a YouTube video on that too, Shah, so you can check that up. The 813 strategy on YouTube. I pretty much go into details of how I use it. What is a bottom study set? So we're basically not going to get into any of these formations, huh? Anyways, double tops, pennants, bull flags, bear flags. Is there any other formation that you think we can get into, guys? I think you guys are pretty okay with seeing them now. If you're having any problem with seeing them though, let me know. Yeah, no. Breakouts. Okay, breakout points. Okay, let's look at something like, okay, let's just use VRX for example, because obviously it had a lot of breakout points. Double top breakout point is where I bought VRX into after hours. That's a breakout point right there. $34.70 long. That's breakout. That's where the chart broke out from this range to this range and made a new base, made a new strong support, and that's the breakout point. If you're doing a smaller area, if you're doing a smaller flag, I mean, even if you do it a really small flag down here, that's your breakout point right there. You can message. Yes, they are. I can go into that. That's a good question, Dan. You guys can say anything you need to in the public, right? It's only me that see your questions, okay? So, yeah, this is a breakout right here. If you're looking at this flag, for example, on a very, very tighter time frame, that's a breakout right there. This area right here, that's your target for your money. So your entry is here. Your risk could possibly be the 13 over here, but your target for your money is over here. Why I'm saying the target for your money is over here and not here, because that's hindsight trading. But the target for your money intraday when you're trading this setup right here, is you're expecting a double top. You're playing for a double top. You don't know it's gonna do this, alright? Unless you're psychic, you don't know that it's gonna do this. The only thing that you do know is that the price can double top here and then flush on you. So when your entry here, you take most of your money here because you're anticipating a double top. Then when it goes over, forms a base you can add into for another move up. Okay, Dan? And was that Dan? No. Yes. Maybe. Let's see. Question. Yeah. Formations, do they get more significant as the time frames are longer? Yes, sir. That's such a cool question. Alright. The reason why when I am in a trade, and I'll tell you guys that, hey, I'm long in a certain trade, and I'm gonna switch over to my 15-minute chart now because I'm still in the trade. I have a fantastic entry and I want to see how far the trade can go. I turn it over to a 15-minute chart, and obviously if we talked about VRX pre-market at this 50 EMA, for those of you, few of you guys that were in pre-market, if Simon was here he could vouch for that, that we actually spoke about VRX long here off this 50 pre-market before anything happened to it. And it was very early in the morning. I was there since 6:30 in the morning. And so just saying, if you got into the trade at any point of this day, say you got into the trade on a 5-minute off of this flag, right? If you're in the trade and you just feel like, hey, I want to see how much the trade can give me, you switch it over to a 15-minute time frame, and then you can use your strategy here to keep you into the trade for a very long time. With this strategy here, if you were on a 15-minute chart on VRX, it would have not given you any reason to sell this chart whatsoever today, and you would still be holding from whenever you got in. If that was the first flag breakout that you got into, and you would still be in the trade, because on a 15-minute time frame it never gave you a reason to get out of the trade. So you would actually still be holding. So yes, changing a wider time frame on your charts gives you a longer duration to hold it. When you're doing a wider time frame, it does a few things. It gives you a much slower entry, but it gives you a much stronger entry. If there's a crossover on a 15-minute chart, it's usually a much bigger move. If there's a crossover on a 5-minute chart, it's not as strong, and obviously if it's a 1-minute chart, it's not strong at all. But it can give you a precise entry, and that's the big difference with the 1-minute on the crossover strategy. It'll give you a much more precise entry, but it won't keep you in the trade long, especially if you're using those 8 and 13 moving averages as your stop areas. But once you're in a trade, you should definitely, if you're in a nice long trade, long or short, I mean, if you're in a nice trade and you feel like you have enough buffer zone and the trade's working for you and it's in the direction, it's carrying a trend, you just switch it over to the 15-minute and just stare at it and let the candles play around. And on a 15-minute chart, you'll get bored a lot if you're not accustomed to it, because this candle would bump up and down here for 15 minutes at a time. So you may get very bored looking at it. I don't, because I used to just purely trade off the 15 before. So I don't really care. But if you are in a trade, yeah, you can definitely. What are you looking for on when MMs are on something? I'm looking for my L2 to be. My L2 will tell me, obviously I have a scanner that picks up some of that stuff, but my L2 obviously confirms what the scanner is picking up. As per, like with VRX or something, if I see the scanners lighten up, I can just quickly obviously look over to my L2 and make sure that the buyers are lined up. And so you'll see your market makers on your L2 confirming what's going on the scanner, and that's how you'll know that they're market makers on it. And you'll know when the money's coming in, because the size that they're buying is a lot different. You see this volume over here? is 8.2 million. This isn't traders like you and I that are buying 100 or 200 shares or whatever, or even 10,000 shares. This is 8.2 million in this 15-minute bar. This is not people like you and I. So this money that flowed into VRX here earlier today was institutional money. This isn't small money. So those are market makers. Those are big money. Why do I hold long losers too long and sell winners too early? Cause how do I put this? Cause you're making simple mistakes like what I'm making, or you're not controlling your emotions. When I say what I'm making, like the win trade, I should have stopped up myself. Yes. Um, Clint, while you're taking, here's what's going on. I tell you exactly what's going on. It has nothing to do with the trade. It's all about you. Why are you holding losers longer? 'Cause you're hoping that the trade goes green. Why are you cutting winners faster? 'Cause you're so excited that your P&L is green. So you get so excited when you see a gain that you can't see it drop $10 or $15 from where it's at because you're too excited seeing the money in it. And why you hold losers longer is because your mind's telling you wait till it comes back up. And I bet you even when you hold your losers, when they come just to break even, you get out sometimes for $1, $2, whatever. I'm just making a comparison here. I'm not sure how much shares you trade or whatever. But I'm sure when your losers come back into the money, even if it's barely flat, you cut it only to see it go crazy higher than where you had it. And you say to yourself, how did I hold that? Or why do I always get out of a trade just when it's starting to move? So it's not the trade. And let me know, Clint, if I'm getting this right, um, or if I'm totally off of it. And if I'm not, then just let me know, cause I've been through that scenario right there where you hold the losers only because your mind's telling you, hey, I need this to come back into the green, and then you cut your winners faster because you're so happy that you're actually making money. Um, so it's okay. So I'm nailing it on the head. Okay, so it has nothing to do with the trade. It's in your head. It's all in your head. Your mindset itself is messing you up. So it has nothing to do with the trade itself. It's all in your head. So as soon as you see green, you're excited. You're excited. You take money. You forget about strategies. You forget about letting the trade work. People always go, how did you have so much patience to wait all day to see a move, and or to get that last push? Or people go, how did you manage to see all that money in your account or something and not take it? Because I have patience, and because I can control my emotions, and also my emotions don't control me. These lines control me after a certain while. Because once I'm in the trade and the trade's actually working for me, I take my emotions out of it completely, which is kind of really, really, really hard to do, and it's going to take you a while to get to it. But eventually you have to take your emotions out of this completely, because after a while of trading, you will realize that you don't need your emotions. Your emotions should be dead once you sign on. There's no, oh my god, I'm making money. Oh my god, I'm making money. I was up 25, 20 points, 25 points, 30 points on DWTI. That was just a point where I was just like, whatever, I'm covering. And it wasn't like I was happy. Obviously, I was happy at the end of the trade, but there was a point where I was like, that's just enough. I mean, like, it wasn't even a round number. I got 32 points, I think. It just wasn't even a round number. I was just like, that's just enough. It's plain out enough. I've had enough. I didn't care about the strategy, and surely it went down lower. Um, but I just felt like I was comfortable enough where it was just like, whatever. So, but you got to get your emotions under control. So it's your emotions. I know your P&L box looks like that. You have two, three trades here. One's a little bit green, two's red. So the little bit green, you're contemplating, oh man, like I should just take that green to kind of negate the red ones. And so when the red ones go green or just barely green, you're like, okay, I'm just cutting it, and I'm happy I got my money back, only to watch it later on and see that it went up like a point or something. And then you're always asking yourself, why do I always cut myself right there? Why do I always take a $20 when I could take $40? Or I'm just making a comparison. So you're always finding yourself taking the least amount of money, or even on a great trade. Like even with that TKAI, there's a lot of people that got messed up on that trade, even though the trade totally rocked. A lot of people got stopped out, and you won't understand why, and you'll try to you'll slap yourself at the end, because what you're not looking at during the trade, at the end of the day, what you're not looking at is you're looking at this thing went up $1.90. How did I get stopped out when I had a $7 entry? How did I get stopped out when I had such a good entry? How did I not make more money? How did everybody end up holding? If I was in this trade, and I didn't play it at all, not for 1 second today. If I was in this trade, if I was staring at this chart, and the only how I can get into charts, guys, is if I'm staring at it. If I analyze it myself, I barely take other people's word for it. I kind of just do my own thing. So even with all the calls, if somebody puts out something and I say, hey, I'm looking at it, I'll tell them straight up I like it or I don't like it. And so even though yeah, anybody, even Terry, I talk to him all the time. He's like, yeah, I like this here. I'm like, oh man, I don't like that. Or sometimes I'll go, yeah man, I like that. I'm getting in with you. It's because I tried it myself too. And so I only really play my own stuff. When I look for stuff overnight, I'm totally only looking for my own stuff. And so, say you took this TKI, or the chart pushed up, you missed this entire move. Or it's okay. Say you missed this entire move, okay? Because if the chart's gapping up slightly, you would expect it to pull back down. It did not pull back down. You did not catch the long side. Okay, whatever, fine. The chart started to consolidate. You drew a flag here. The chart broke out. Your target for first money was over here. You got into that area over here. Well, the funny thing is, Clint, knowing your emotions are controlling you, when it popped over here and it started pulling back here, you'd probably sell your position right here. And so you would have gotten in over here at 681. The chart pushed up to over 7, pull back under 7, and you'd sell your entire position right here only to see the entire thing move, because you're just not letting the trade work enough for you. And trust me, that's a ton of people that do the same thing. Especially after you see a little bit of green. If you're in a long trade and you see a little bit of green, it's the hardest thing to see it go red. It's the hardest thing to see it go red. There's so many times when I get into a trade, and obviously sometimes you get that first pop or something and it goes instantly green. It's not the target that you're looking for, but before you can even get to that target, it pulls back and it goes red on you. So now you're thinking, oh man, I just had, $200-300 and I just let it go $200-300 against me. But I wasn't looking for $200-300. I was maybe looking for $1,500. So my target was all the way up wherever, but my stops were still underneath. So it came into the money, came back out of the money, and most of the times once you're out of the money, knowing that you had money before, once it gets back into that green area is where most people just take their money and they exit the trade only to see it move afterwards. So that's all emotions, and that's why your stops and your specific areas for stops are going to protect you from your emotional struggles. But yeah, say you got into here, chart moved. Say you did not get short, shaken out here. You took some money over here into this one. Oh, I know that is a hard one. But I think Terry, I think that's one of the hardest, um, best lesson that that new traders have to undergo. Um, how to control your mind, and it's all mental, right? It's just pure mental. Cause just say this trade, say you got in here, perfect entry for a trade. Got popped over here, pulled back here. You saw this candle pattern right here. You got shaken out. Trade's done. You're out of the trade. You took 10 cents home, only to see it move up all this way over here, right? The another an emotionless trader, once it moved from here to here, still didn't hit their target, so they holding it for that target. It hit the target over here, and then they see a double top. A lot of people over here on this pullback would get shaken out. But if I had a naked chart here, you probably wouldn't have um, a comfort of knowing that there's a moving average underneath you, right? But if you have moving averages, you still have that comfort of that 13 EMAs underneath me. I'm gonna hang out with the trade, and once you get into an area where the chart's actually starting to make higher lows, you're kind of in sort of you're in a formation, you know, you're in a trend, and so you should start seeing those things in a wider perspective, rather than just keeping your stops really tight, and then you would let yourself work into the trade. When this pulled through the 13 here, and it would be nobody's fault, but you probably would have gotten stopped out there. Check my GNCA trade today, okay? And I'll show you what happened, how I had a perfect trade, and some idiot pulled it under the 50 EMA here and stopped me out. I got in at $6.90 long on GNCA off of the 50 EMA support, okay? And I wrote it up here. Chart was moving really nice. I had no problem with the trade. I just left it, didn't touch anything, didn't take any money. So I got in 690. It's hitting, you know, 720s or whatever. I'm so comfortable with the trade. A little pullback here, not scared at all. I got my 50 under here. My stops are under the 50. Somebody whipped it right here, stopped me out, popped it up, and then pushed it all the way up here to 745. So that was my target, actually. When I got in at 690, I said I'm going to sell it at $7.45. And so they stopped me out here, and that was it. And then they ran it after me. I mean, was it my fault that I had stops under the 50? No, that's where it should have been. Was it my fault that I got stopped out? Hell no. So technically, I did nothing wrong here. They just decided that they didn't like me very much, and they popped it, and then Keith, you sold at 740, and I got stopped out here. My entry was 690. I got stopped out somewhere right here. I can't remember if it's 702, 703, somewhere around there. I mean the 50 EMA was good enough for me, and you got stopped at 709. So we ended up making nothing. I made 10 cents on this trade, where it could have gone from 690 to $7.45, which was my target when I kept playing it when I started. So oh, you didn't raise your stop, Keith. Basically, let me get this straight. You had a 690. You lucked out on this one, by the way. You had a 690 entry, and it's at 725, and you still didn't move your stops up even a little bit just to cover your commission or anything. I mean, look, totally worked out for you on the lockout side, okay? But as far as a strength of a moving average, it should have been here. And you didn't get stopped out, obviously. The rest of us did. But for next time, it should be on a stronger moving average, which is this 50, and it pulled and it would have stopped you out too, I understand, but it should have been somewhere on a stronger moving average, just not all the way up to the 50. Oh, well, you know what, Keith, and that's just part of trading. You totally lucked out on this one, not having it tight up to the 50 like I did. I just had it right under the 50. I didn't expect it from here to pull back. Um, so I just felt like my 50 was safe enough. But you totally, it worked out perfectly for you in that situation. Um, so am I changing it every 15 minutes? No, I'm just kind of guiding it up here. But once it came out of the range, and once it came over this range here, the high of day area, I just moved it up. And because if you watch from a range from here from 7.20 to $7, that's a 20-cent move on a range for at the open and didn't have that much range. So 20 cents was decent enough for a stop. I'm not changing it every 5 minutes, but at this point I was already in this range where I got stopped out. And I think I did cuss a little bit when I got stopped out because it was just stupid. Whoever stopped me out was just stupid. Um, but yeah. So anyways, I got stopped out. But for you, it worked out great. You see, that's a great kind of example right there, Keith. Trading is it's all, it's good, it's technical, it's there's a way to do it, there's a way it should happen. But in your case, it worked out perfect for you, right? And that was not in my case. This was the way it should have happened. I should have gotten stopped out. In my the what other trade that ran up on me? Uh, the frick, the big one, SHGP. I should have gotten stopped out, but I didn't. So I ended up coming back into the money. And in your case, it just worked the same way. So it's basically the rules the rules should be bent if it's for you. If you feel like there's a bigger move in it or something like that, you could bend the rules. There's nothing written in stone anywhere. If you have conviction for a certain thing, if me with my DWTI knowing that I'm thinking that oil's gonna pop based off the daily charts that I've been doing on oil, and I was thinking like oil was due for a pop, and I was convinced that my DWTI would give me that sort of move. I wasn't worried. I When we closed on the day before, and I told you guys I have 10 points on DWTI right now, and I told you guys on mic, I said people may think I'm crazy for not taking this 10 points and going to bed knowing that I'm 10 points in the money, and I didn't take it. But I just had such strong conviction about the fact that I think oil was due for a pop, and obviously I made good money on the DWTI. So I'm just trying to say that, like, sometimes you and it does come with experience, Terry, and he nails it right there, where it does come with experience, where sometimes you can bend your own rules just a little bit because you have that feeling that things are gonna move up or in a certain direction, and you just gotta it'll come to you. For right now, use the technicals, all right? But it'll come to you where you can say, "Hey, I feel like this move is grinding. It's gonna push higher." When I called for a VRX push at the close, it was like I felt like it was coming, and seeing this after hours was really I actually had a friend that messaged me, said, "Hey, VRX is moving." And so that's why I came back into it. But the feel that I had that the chart was gonna break out was there. It right into close when I was talking about it. I just had strong conviction that VRX was going back to high of day, and I told guys here that you're gonna see that high of day test, and surely it came back and tested it to the penny. So when you have conviction, sometimes it's not because you're just being ballsy. It's because you just kind of see it setting up, and it'll come to you though. Keith and those guys that are newer thinking, okay, that just makes no sense, but it kind of doesn't make any sense, and it's not something that you'll read in any book because there isn't a book to kind of word it properly. But you'll end up, after a while of trading, you'll end up feeling things, about directions and about moves, and um and it'll be something that'll be a little second nature to you, and that you'll see it without lines or without charts or without moving averages. It'll just come to you, and that's kind of where I'm at right now. And I feel like it's just like the Matrix. Like I can just kind of see it, but not every time it works out. But when like these last few days or a couple weeks, it's just been non-stop where it's just pinpoint accuracy, and it's been amazing. ICPT charting, reading symmetrical triangles and whether they will push up ICPT. ICPT has information that's coming out. Yeah, it is kind of late, right? Isn't it? Shit, it's like 10:30. Yeah, and the triangles, they, you know what? Triangle formations, diamond formations, domes, um, uh, ascending, parallel flags. You know what? There's just so much wording for the same type of thing. Don't get too confused with all the wordings. There's a lot of formations out there, guys. You want to study domes, you want to study diamonds, you want to study every single thing. There's basic ones you can look for, and there's certain ones that you can make pure money off of. And if you're here to analyze formations and get to know every single one of them by their first name, that's on you. I'm not here for that. I'll tell you, this chart's flagging here. There's your point, there's your breakout, there's your stop, and that's it. And if I call it the wrong thing at the end of the day, does it matter if you made money or not? So it's not, we're not here to really pinpoint every single thing, and there's probably 1,000 different wordings for these things that I say. But just learn the basic ones, the basic formations. I'll kind of close up with the basic formations: the head and shoulders, the flag formations, either it being a bear or a bull flag, double tops, double bottoms, a channel trade, and remember today when we were doing SRPT, here, SRPT into close. I know that my lines are gone now, but I did a perfect channel for you guys today, in the right into the end of trading there, and I told you guys, okay, now this SRPT is in your channel here, and it'll just continue being a channel trade. Watch that channel tomorrow, because that'll be an area that this chart is gonna want to come back in. I'll leave these lines here. We'll see how it affects tomorrow. But I'm sure that this trade is going to want to come back into this channel or touch the underside of this channel or something. You'll see. I'm sure. Because the channel is here and the exact same channel is down here. So this channel right here is part of this trade's life until it breaks it. So we'll get into that. Will I be looking to short it? Nah, I would play this more on the long side, actually, tracker. It's just a really bullish chart right now. And buyers are still strong. So if buyers are hot, don't be shorting them right now. Just look for pullbacks and play them long. Anyway, so I'm going to stop recording.